Ever wonder who decides if you get that loan? Have you ever been denied credit for a car, a house, or even a new phone plan? It can feel frustrating, like some mysterious force is holding you back. Well, that force might not be so mysterious after all. It could be a company called a credit bureau, and the information they have on you plays a big role in shaping your financial future. But with all these credit bureaus out there, which one actually matters for businesses? Is it Equifax, Experian, or maybe even TransUnion? Today, we're diving deep into the world of business credit and figuring out which credit bureau reigns supreme. Now, before we jump in, let's take a quick step back. You might be familiar with credit reports for individuals, but businesses have them too. These reports detail a company's financial history, including outstanding debts, payment habits, and any legal judgments. So, when a business applies for a loan, a credit card, or even insurance, potential lenders will often pull this report to assess their risk. Okay, so we've established the importance of business credit reports. But who actually creates and maintains these reports? That's where the credit bureaus come in. These are specialized companies that gather information about businesses from various sources, like banks, vendors, and even public records. They then compile this data into a report that lenders can access. Now, here's the million-dollar question. When it comes to business credit, which credit bureau holds the most weight? The truth is, there's no single answer. In the U.S., the three major credit bureaus, Equifax, Experian, and TransUnion, all play a role in business credit reporting. However, their influence can vary depending on the industry and the type of credit being sought. Here's a breakdown. Equifax, often considered the leader in commercial credit reporting, particularly for larger businesses and those seeking significant loans. They have a vast database and are known for their comprehensive reports. Experian, another major player, Experian is strong in small business credit reporting. They offer a variety of credit monitoring and analysis tools to help businesses understand and improve their creditworthiness. TransUnion, while not as dominant as the other two, TransUnion still holds significant sway in certain sectors, like healthcare and technology. They're known for their innovative data analysis tools. So, what does this mean for your business? Here's the key takeaway: don't put all your eggs in one basket. Since different lenders might rely on reports from different bureaus, it's crucial to maintain good credit across the board. Here are some actionable tips. Monitor your business credit reports regularly. Each of the three bureaus offers options for accessing and monitoring your business credit report. Dispute any errors. If you find any inaccurate information on your report, don't hesitate to file a dispute with the respective bureau. Build and maintain a positive payment history. Paying your bills on time is essential for building a strong business credit profile. Establish healthy credit relationships. Building relationships with vendors and suppliers who report your payment activity positively can significantly boost your score. By following these steps and understanding the role of each credit bureau, you can ensure your business has the best possible chance of securing the financing it needs to thrive. Remember, a good business credit score opens doors and creates opportunities. Take control of your financial well-being and start building a strong credit profile today. With that said, thanks for watching, and until next time.